Good Sunday. Good Sunday to all the listeners out there and the audience out there. I'm so happy to be here today for another insurance matters sharing. Today's topic is how much life insurance does a young professional need? You know, when I was preparing for this session today, I was asked by a friend, Renan, are you pre-recording all your shows? My question is no, everything is live. Today what you see me is live. This is live, this is not pre-recorded. If you put a question now up here, I will answer your question straight away. This is a live show, it's not a pre-recorded show. But then his next question, he asked me, why are you dressed up every time when you're on live? It is 10 o'clock at night. Well, my answer to them is very simple. I took my work very seriously. And I took my audience very seriously. That is why I'm always dressed up. 10 o'clock, I'm still dressed up, right? So today's topic is rather interesting. You know, this is live. Why I'm going to tell you, my wife is taking a picture of me. Hi, Nori. I have the number one fan, my wife here, that actually take pictures of me every time I do a live show. Now, it is not easy to come up with a topic every week, twice a week, and try to do this. So today I am going to do it differently. Why? Because this question, how much life insurance does a young professional needs? This topic's been asked of me many times. A lot of young professionals, they really do not know how much life insurance they need. And a lot of times, they took a number of whatever their agents tell them to, which I'm not saying is bad you know, but I'm just saying is not totally accurate at sometimes, because a lot of agents tends to be what we call fortune tellers. You know what is fortune teller? They look at your face, they say you look like you're worth 600,000. You should buy 600,000. They look at your face, their Tai Xiong Lo can tell them, I think you're worth 300,000. You know, you should buy 300,000. You should buy a saving plan 300,000. That is not the right way to do it. You know, you don't pluck a number from the sky. Life insurance actually need to do some scientific calculation. You need to do some calculation. Now, I'm not asking you guys to go through a prolonged kind of financial planning kind of thing, you know. Go through 3 hours with your life insurance agents, go through like 81 pages of financial planning, and at the end of the day you are bored and you don't want to do anything with it. I'm not asking you to do that. I'm asking you to go through 3 simple steps. Let me just share with you 3 simple steps to actually plan out how much life insurance you have. And when you know that number, you know where to go on to. You will know how much you need and what is your shortage is, or have you bought more than what you need, and from there you can adjust your policy accordingly, right? So today, for all the young professionals, when I say young professional, means if you're a doctor, if you're a lawyer, if you're an engineer, if you're a teacher, if you have a profession, or young entrepreneurs, if you're a young businessman. When I say young, I mean 40 years and below you know. I just passed young Anybody who is 40 years and below, I think you're quite young. You can consider young and listen to us. How does this topic, how much life insurance you need and how we calculate, and applying that 3 simple steps that I will share with you later on, and actually get an accurate number for yourself, and so that you don't overbuy, number 1, or you don't underinsure. All right, we get the deal? So, okay, I can see Paul Liang Wong just share this post, Crystal. Go ahead, please share. If you do know somebody that will benefit from this sharing today, I would like you to share with as many people as you can. If you know any lawyers, doctors, professionals, young businessmen that need some advice on how to get life insurance at a better way or a cheap way, or say how to calculate his needs, share with everybody. So I will do about, say, 20 minutes to 25 minutes of a small presentation on how to calculate the 3 simple steps to calculate your life insurance. And I will spend about another 20 minutes answering questions. I've got some questions prepared by some listeners and audience who actually email me. There are about 4 or 5 questions. I'll try to answer that. And also I will take questions from the floor. So if you like what I'm doing now, can you just give me a thumbs up? Give me a thumbs up to encourage me to go on, right? So I'll go. This is my friend. This is one of my best friends. He came to the show, Fei. Hey, brother. I think he just finished work. Thank you for coming in. If you like what I'm doing, and you think that I can present this well for you, give me a thumbs up, or you can actually press 1 for me, so that I'll give you more of what I know after 20 years working in this life insurance business. Okay? Now, this is not an agent training session, but if you're an agent, you're welcome to listen to this and use it on your clients. But this is for clients. If you're a client, if you're not in the insurance business, if you do not know how to take care of your life insurance, now, this is something you should listen to, okay? Now, let's go on to the first slide that I have. How much life insurance is enough for young professionals? Young professional means doctors, lawyers, engineers, young entrepreneurs, and all this. As long as you're 40 years and below, you have a small family, you have a small business, you're considered young professionals, okay? So how much life insurance do you need to buy? A lot of times you get different numbers from different agents. Today I'm going to share with you how to actually calculate that accurately among your clients, among yourself, right? So number 1 is this: why do I need to buy life insurance? Now, basically, a lot of people ask me this question, why do I need to buy life insurance? And some of the answers you get from clients are just mind-boggling. Some tell me they want to save money, that's why they buy life insurance. Quite interesting, but not accurate. You can do that, but not very accurate. Life insurance is meant for death, then pay up to your family. Why do you buy life insurance? You must have a reason to do it. Why do you want to buy a car if you're not driving a car, right? Why do you want to buy nasi lemak if you hate eating nasi lemak? You need to buy life insurance for a reason. Now, these are some of the reasons. Number 1, debts. Number 2, parents, family dependence, and charity. So let me just explain how it works. Now, what is debts? Debts mean whatever you owe somebody, not your money. You already use somebody else's money. So that is debts. I'll explain to that. You want to buy life insurance to take care of your debts, just in case the person dies, you have some money to pay somebody you owe, right? The second is parents. A lot of people actually did not actually consider this factor, parents. Now, our parents took care of us for about 23, 25 years. Some of you took longer to grow up. They took care of you until you are 35. But most of us finish schools and start to earn money at 23, 21, 22, 23. So your parents basically pays a lot during these 20 years to take care of you and make sure that you grow up with education and all that. And to sadly saying, a lot of parents actually use their savings and pay for your education. Now, once you grow up, if you haven't prepared something for your parents, there's something wrong with you, right? Now, what I'm saying is that your parents are old after giving you education and all that. Their earning capability breaks down. So a lot of them depends on the children. They actually give them a good living. My mother depended on me when I started work. Why? When they retired, they didn't have an income. So what I did is that we gave them a monthly income so that they live well. So that is very important. If your parent is 60 years old, you have to look at that. How many years more are you going to provide for them? And you need to buy insurance for that, just in case you die young. If you die young, who is still going to take care of the parents? So this is one part a lot of people didn't think. Number 3 is family dependence. That is very clear. Your wife, your husband, your children, your dependents are your children, basically your spouse and your children only. So that one, a lot of people take care of that part, or because baby cute, so they take care of the baby first. You must take care of the parents and also the baby both also must take care, right? So family, you have to take care of that. Why you need to buy insurance? Because you decide to have a family, you decide to have children, you decide to marry the girl of your life, and that's responsibility starting from day one, okay? Right? So I see some of my friends are here. One Mutalib, hi, how are you? You know, when you decide to marry somebody and get married and have children, that's responsibility. You need to get that fixed, okay? If you die early, who is going to take care of your children? Last one is very, very rare. Charity. I've done only charity policy maybe for 2 people in my whole career. Nobody really give money to charity out of insurance one. But there is 1 or 2 people. So if you're a very charitable person, insurance is one of the cheapest way to set up a charity trust for your whoever charity that you want to give money to. Why? You're paying pennies to a dollar. You're paying a fraction of the cost. Instead of giving 100 million in cash of your hard-earned money, you can just pay, say, 2 million life insurance premium. And if you die, the insurance company pay 100 million. So what I say is that I'm not saying that you don't do charity, but not many people uses life insurance to do charity. Okay? So one of the way. I can see Melissa does do charity using life insurance. That's good for you, Melissa. You know, I hope you buy more for me, right? So let's move on. So now, how much to cover? How and how much do I need to cover? Okay, just these 3 simple steps. Pay off your debts, pay your parents' living expenses, and support your family. That's it. Let's look at charity after you have taken care of a lot of things. Then you want to look at charity. But at this moment, I just want to talk about these 3 things. Pay off your debts, pay your parents' living expenses, and support your family, right? If you have more money to spend, then you want to pay off debts, pay off this, pay off that one, okay? So the first 3 things, pay off debts. So let's go one to one. So paying off debts, these are the things, these are the lists that you owe somebody. Now, if you have one of these debts, then good for you. But if you do not have them, then you take them off. So my 3 simple ways, very simple. Pay off debts, pay your parents, and also pay the family needs, okay? If any of these doesn't matter to you, so take example, you have very rich parents, then you take that thing off, okay? Then you add up the rest. Now, let me just go off pay off debts. A lot of us have debts. What is your total debts? Have you calculated your total debts recently? Have you really sit down and calculated your total debts recently? Anybody has study loan? Please press number 1. If you have a study loan, please press number 1. I think I have a study loan. I do have a study loan previously, but I paid off. So if you have a study loan, press number 1 if you do have. Who has credit card debts? If you have a credit card debt, press number 2. I have credit card debts, I'm going to press number 2. Right? If you have credit debts, press number 2 and let's see whether there's anybody who don't have any debts or not. House loan. Everybody has a house loan. I have a house loan. I have to press number 3 as well. So if you have a house loan, press number 3. I can see Vincent and Ali say that they have study loan. Good. Hazlin also. A lot of people have credit card. My wife has a study loan. If you have a house loan, press number 3. Do you have any personal loan or not? I do not have a personal loan, so 0. I do not have a personal loan. If you have a personal loan, press number 4, right? Family loan. What is a family loan? Now, that is something very interesting. Family loan means you borrow from your sibling, your mother, your father, your parents. That is what we call a family loan. If you have a family loan, press number 5, alright? Press number 5 if you have a family loan. Be honest to yourself. The last one is a business loan. If you borrow money for the business using the business name, but you are the guarantor, that is a business loan. So business loan, if you have a business loan, please press number 6. Do I have a business loan? I don't think I have a business loan. I do not have a business loan, right? So a lot of us owe money here and there. So if you have this loan, take some time and remember that. Who have you owe money to? How much loans you owe? How much? And take an account of the total debts that you have. And take an account. And the first thing you must do when you buy insurance is to pay off all the debts. Why? When you die, you don't want to leave the debts behind for your wife and your children. The worst, to leave debts behind for your parents, especially family loans. Family loans, you borrow from, say, your uncle. When you die, it doesn't mean it go away. It means somebody in your family that is next closest to you, most probably your parents, will have to take care of it. Unless your uncle is so gracious and forgive it. But that doesn't normally happen. So please, please, please buy insurance to take care of the debts. That is crucial. So if you have all these debts, right, let us know and put it in, right? Number one is to pay off debts. Number two, your parents' living expenses. How to calculate your parents' living expenses? Your parents gave you milk powder, breastfeed you, dress you, put you to school, put you to college. And don't tell me when you die, you're going to leave them, to the good hands of our government, right? Under kebajikan. It doesn't work. Malaysia has no basically welfare for old people. God but you do not want to send them to the kebajikan. Okay, it's terrible. So what you want to do is that let your parents live with dignity, right? You love them. You want them to live with dignity. So you must leave some money behind just in case you die before them. And that happens. That happens to my own cousin. He died at 23 years old. His parents is 70. What happened then? So you have to take care of your parents. Now, so how do I calculate this? If you do have a living parent, if you do have one or two, if you have two, God bless you, you're so blessed. If you have one left, good, you still have one. Like me, I still have my mother. So I take care of my mother, right? So, that day, just something sideline, I watched a documentary with my mother talking about in India, people leave their parents at the Ganges River to die because they cannot take care of them. When my mother saw that, my mother cried. My mother said, how lucky is she that she's living with her son and with 4 grandchildren and a very good daughter-in-law taking care of you. So if you have a parent, please appreciate your parent. Nothing comes nothing comes more valuable than the filial son. Okay. So how do you calculate parents' living expenses? Just in case I die, I will leave $500,000 to my mother. I personally have one policy that is in my mother's name, a beneficiary, because I want to leave $500,000 to my mother. So, but that is a bit too much. Last time when I calculate $500,000, because I have 2 parents that are still surviving. So now left 1. So anyway, I didn't change much. So the year of dependency times the amount per year and divided by the number of children. So take example, like if your parent both needs about 3,000 to live by a month, times 12 months is 36,000. If they are 70 years old, you times the amount of year that you expect them to live, and by that divide by the number of children. So let me give you an example. If let's say 3,000, 36,000 a year, let's make it 40,000 a year. If they are 70, let's look at life expectancy until 76 times 6 years, which is 240,000, and divided, if they have 2 children. So each person must prepare 120,000. But let me just give you that is an ideal that you can divide among all the children. But sometimes you have a sibling that don't really work that don't really contribute to the family. Right now, everybody has one, right? I cannot say I have one, but I think a lot of us has one. A black sheep in the family that really don't contribute much. So you have to take him out, because he's not going to contribute, and you have to do more, right? So the numbers of years of surviving for our parents, it is crucial. Why? It depends. The average life expectancy of an old person now is about 76 to 80. My father lived until 74. Good for him. He has been overweight the whole life. I'm overweight my whole life. But yet again, he lives quite close to life expectancy, So he lives a happy life anyway. Your in-laws, you must think of your in-laws as well. Parents' living expenses, a lot of us forgot that we are responsible for your in-laws. Why? If you're a man, you married a woman, the woman didn't work, your wife don't work, then your in-laws' living expenses fall on you as well. Think about it. Because if you die, your wife is without a husband, you have enough money to take care of a family, but then who is taking care of the in-laws? Your wife will still use money that is left by you for the family and support the in-laws. Can you get it? Simple, right? So you must prepare for your in-laws if your in-laws family has only your spouses to depend on, right? So next, your own family. This is quite easy to calculate. This is very simple, very straightforward. I normally calculate on two factors only. Number one, is your spouse working? If you're a woman, then if your husband is working, then you have to count. You don't have to take your husband into consideration. Why? Because your husband will be able to take care of himself. You only have to take care, you have to think of the number of children you have. So like me, I have 4 children. If every child takes, I calculated, every child takes about 2,000 ringgit worth of dependency on me. That I put in education, I put in local education, no private school, but university class and all that. They need about 2,000 each child a month. That includes nannies and all that, okay? Then times the number of years. So my younger is 4 years old. If I look at them, they will actually be independent in 20 years time because the younger is 4 years old. So I'll have 4 kids times 2,000 a kid times 12 months and times the number of years, which is 20 years. And that is a lot of money when I have 4 kids, right? But if you have 2 kids, good on you, lor, then you don't have to prepare so much, lor. So a child dependency age is about 23 years old. Now, very rare you have a child that will actually goes until 30 years old, so you need you to actually, what they call this, pump in money. So, but if you have a child, can you tell me how many children you have? Just punch in the number, right? Just punch in, like I have 4 kids, I'll press number 4. If you have 2 kids, you press number 2. If you have 1 kid, you press number 1. If you have no kid, then you press 0 lor. If you are still single, put X, so that the other audience know you are single and can actually talk to you, okay? Right? So by the number of kids times the number of years, wow, Dahlia, you have 5 kids. That's amazing. At last, I met somebody who beat me in the number of children. Jackie had 3. Noreen, of course, has 5, right? Noreen is my wife. Okay, Melissa is not even married yet. Okay, good. Right? Wan Mutalib, thank you. 0 but not single. I know. Right. Hazlin has no children. Okay. So good. Now we know that number of years, number of children times number of years, then you get a number. So like for me, I probably need about 2 or 3 million because if you times it, it is about 2 or 3 million life insurance. Now educations. Do you really have to prepare education for them? The rule of thumb is about 2,000 to 3,000 for local education. If you want to prepare for local education, you want to prepare 2,000 or 3,000 a month, because when they are in primary school or secondary school, they don't use 2,000 to 3,000 a month. Those money you save up for the tertiary education locally. So if you want to send them to Dublin, and just God bless you lah. That one I also don't know how to calculate. I can calculate, but you have to sit down with me for 4 hours, no, like 3 hours. It's called financial planning. All right, it's not too hard, but it's more complicated, right? So spouse dependency. Now you have to ask yourself whether your spouse needs your money or not. So if your spouse is a housewife, sorry, your spouse needs your money, lor. Why? Because how to ask your spouse after 10 years never work for people, suddenly go and work for people? It becomes a problem, right? Think about it. Don't ask your wife, 15 years not working for anybody, and suddenly you die and you ask him to go and work for people. It doesn't work one, okay? Cannot. You must let her continue to be a housewife. If your wife is working, good. But you must think also, if your wife is working partially or lighter work because you are making the most money, then you want to provide some money so that she can take work off and really take care of the children for the remaining years when you're not around anymore. Losing one parent is hard enough, but losing another parent to work is worse for your children, okay? So that is something that you want to actually consider, right? So if you think that I'm giving you value and content, Can you give me a thumbs up? Can you press 1, and give me a thumbs up, right? So the last one is charity, okay? Let's look at charity. Charity is very subjective. I've done this for 2 clients only, where they set up an insurance policy, say they buy $1 million, and they give it up. They put the beneficiary as a charity. So when they die, right? So I've actually do one only for 1 client, 2 clients. So not many people done it. Now charity, no one knows how much actually you want to give. That depends on you. You want to give 1,000, 2,000, that depends on you, or 100,000. But it's a number that you must know. It's a number of how you feel. So I'm not going to stress on charity, but if you need to do a charity policy or a charity trust, we can help you do it, okay? We can help you do it, right? So what is the total life insurance do I need? It is your dad plus your parents plus your family plus charity. So most people don't have charity, just these 3 things. 3 simple steps. Number 1, how much debts you have. Number 2, how long will my parents survive? If they survive, how much I need to prepare for them? Number 2. Number 3, how much my children and my spouse need if I don't survive, say I die today. So you just calculate these 3 things. Very simple, right? 1, 2, 3, and then you calculate, and that's the life insurance amount that you need. Like, so for me, I have 4 children. I need to take care of 1 mother, and I have a debt of say 2 million, including my house and my shops. So that is the total debts I need, about 5 million. So I will buy 5 million worth of life insurance to take care of all the needs that I have to do. All right, simple, right? You don't have to do a full financial planning to actually understand this, right? So everybody can actually do this. If you have a pen and paper, try to do it tonight, and get to know how much life insurance you have. So how much should I spend? Then the next question comes, how much should I spend on life insurance? A lot of people ask me this golden question. That day I have a doctor who asked me, how much do I need to spend? So the rule of thumb is about 8 to 12% of your income on all coverage, including your medical, your life insurance, your critical illness, your PA, everything, about 8 to 12%. Start with about 6% first. If you are new, if you are a young professional, start with a 6% first, then slowly you want to bring it up. Now for private doctors with no significant EPF contribution, let me just put it this way again. For private doctors who only contribute 3,000 to deduct EPF on your income tax, they make 100,000 but they only put 3,000 a month. For those doctors, put 3,000 a year, not a month. For those doctors who contribute only 6,000 a year, minimum one to get hold of the tax deduction one, okay? For those doctors, please, you can consider to do a 23% kind of contribution to an insurance policy or some savings in the FD or whatever for retirement income, with retirement income. So we can do that for you. If you want, we can actually help you to draw this up. It works like this. It provides insurance coverage just in case you don't survive or just in case you become disabled, and it does provide a retirement income at the end of the day when you decide to retire at the age of 70. So we do that kind of arrangement for doctors. If you need, then we can actually talk to you, right? So case study, let me just give you a case study of a private doctor. This doctor is 42 years old, just came back from US, and he's a GH specialist. He works in a government hospital. So his income, including of locuming here and there, it is about 200,000 a year. He has 1 child with a professional wife, right? His wife is a professional that doesn't need his income to survive. And he has only 1 dependent parent, means the parent still needs him to support the life. There's no loan because he just came back from US. So how much life insurance he needs? So we did this calculation for him. Look at this, 1 child, if it's 2,000 a month, times 12 months, times 23 years, his child needs about 552,000 in support from 1 year old until the child is 23. So that is for support for that 1 child, 550,000. The dependent on the 70-year-old parent is 8 years. Say, if let's say she lives until 78, 8 years times 1,500 a month for the next 12 months, that is 144. So in total, the life insurance that he needs is about 700,000. So when we did this for him, he looked at it and he said it makes sense because that's the amount he needs. Because before he met me, his previous agent quoted him a 3 million life insurance, and he told me If I'm going to spend 1/3 of my income on insurance, what is life for? So that makes sense, you know, you don't overquote people, you know. He needs 700,000, you go and quote 3 million for what? But what I'm trying to tell you is this: if you're a doctor, if you're a specialist, you have a way to calculate. Don't just depend on the agent to tell you how much. There's a way to calculate it, okay? So what happened with this client is this: he bought $1 million life insurance with critical illness at the end of the day, and paid about 10%, no, 9% of his income for it. That's in that 9% of his income for the policy. So he was happy. He didn't make noise. He was happy that he didn't pay half his 35% of his income. He paid about 9% of his income for it, and he got himself adequately covered. So that is the right way to do it for a client, right? If you think that if you're still there, you know, just give me a thumbs up or give me a number 1, and we are ending the session very soon. So this is my team. My team is Mei Wong, Pui Ling, and Melissa. I'm not a solo agent. I work all around for clients. I do everything for them. Basically, I just want to tell you, I'm not a solo agent. I have a team that actually supports me. So if you have anything that you need on insurance and all that, give me a call, you know. We are more than happy to help you. So how do you call me? How do you get hold of me? You either can actually write into limrenenlive@gmail.com, or you can actually SMS me at my phone number 016-238-6161. But if you want to speak to one of my staff for services, needs and all that, you can directly SMS them or email them, no problem, right? And if you have questions, please paste them up, you know, we can actually help you to answer them. So the conclusion of this is, buy only what you need. Let me just put it this way: if you are buying a life insurance policy, I will urge you to buy only what you need. Do not buy whatever your friend asks you to buy. A lot of us buy because want to support friend. Good for you, you're a good friend, you know. But in the long term, not very good for your income, not very good for your pocket. So buy only what you need. How to know what you need? Calculate how much you need. That is the best way. Do not buy the cheapest policy. Buy one with a returns. So if you do need a help on how to calculate that, let us know. I'm more than happy. Our team is more than happy to help you calculate how much you need and how much money you want to put aside to have that. Okay? So we have some questions. So I'm not going into question and answers. If you have a question for me, I can actually help you to answer some of the question. I do have some question pre-prepared by some of my clients, and also some of the inquiries sent through emails. All right. Okay, let me just answer this question. This is sent by a young houseman. He's one of my clients' brother, young houseman. So this guy is 26 years old. He said, "Hi Renan, I'm Derek. I'm 26 years old. I'm a young houseman, works in the government hospital. How much should I spend on insurance?" This is a good question. How much should I spend on insurance? My answer for him is this. If you are young, 26 years old, and houseman normally makes about 4 to 5,000. They don't make 40, 50,000. They make about 4 to 5,000 every month. Houseman, medical officer, you know, just entered service. I will urge them 4 to 5,000 to put aside around 350 to 400 a month, about 10% of your income, as insurance needs for everything, everything and everything, for your life insurance, or if you need a medical insurance, whatever that you need to buy. So about 8 to 10%, that is the max that you should go. All right. So that is one question I can answer for one of the reader actually sent in a request. All right, one of the audience that sent me a request. So second question: should I buy a medical insurance if I'm serving in the government? By the same guy, Derek. Should I buy a medical insurance if I'm serving in the government? My answer to you is that you can actually put medical insurance as the last resort. Why? Because if you are serving the government, you're going to have government's support on your medical needs. So I will urge you to not put so much emphasis on the private medical insurance. I will urge you to put more emphasis on your life and critical illness policy and a PA policy, and get some savings out of that policy. Not so much on medical, because you still can rely on the government. The only downside of you not having a medical insurance is that if you become unhealthy, then you couldn't buy one anymore. But I'm not too worried, because you're a doctor, so you know how to take care of yourself. So that is something I would urge you. Medical insurance should be the last thing that you should buy for any government hospital, doctors. Why? Because you need to take care of your life and the critical illness first. Once you got that two things take care, then you might want to take care of the medical insurance, because you want comfort at the end. I have a session that specializes on medical insurance by government doctors. That session will tell you why doctors need to buy after they take care of the first two things. Okay, so I can take question. If you have a question, I can actually do this. Vincent asks, can I have a medical insurance plans with this plan? Yes, you can, Vincent. You can buy a medical insurance with this plan. But today we are talking about life insurance, right? You can add the medical insurance in if you want to. You just have to pay an extra premium for it. Okay? But I would not recommend you to mix up life insurance with medical insurance. Don't mix them up if you can, right? So don't mix them up if you can. Just buy a medical insurance independently and buy a life insurance independently. Okay? So I will take one more question, because we are running late in time, already 40 minutes into it. We are running late in time. So one more question from the thanks, Vincent. One more question from the crowd. It says here, I took a savings plan from a friend for 12,000 a year. I can't pay it now. This is from a businessman, a young businessman, a young 29-year-old businessman. I can't pay it now. Can I defer it or cancel it? Right. So my suggestion to you is this: if you have a saving plan from a friend for 12,000 a year, and if you have paying for more than 5 years, I will urge you to do whatever you can to finish it, if it's a 10-year plan or a 6-year plan. All right. But if you have paid for a year only and you can't pay for it already, then ask for a deferment from an insurance company. Ask for a deferment and stop paying for it for now. Then see what happens later. When you are better, business are better, then come back and pay for it. Okay? So, any question from the floor that we can actually do that? We will answer some of the question. If there's no more question, then we will end the session today. I'm so happy to be here and to do a 40-minute session and to talk to all of you. And if you have anything that you need me to answer, you can actually... Oh, there's one question picks up from... Okay, here it says, Melissa says, this is my secretary, Melissa says he's asking for his client, for her client, for my clients watching, how much is the average amount needed to spend on life insurance for good returns? What do you mean by good returns? Good returns means what? 4%, 5%? Are you happy with that? If you're happy with 4 to 5% returns, you're looking at a premium of about 1%. 100,000, you pay 1,000 worth of life insurance, about 1%. A million is about 10,000, okay, for good returns. For say 4 to 6%, 6 to 7% kind of returns policy, then you need to do about 2.5 to 3%. So we insurance agent use percentage to calculate premiums. Clients doesn't. Clients use dollar and cent. We use percentage. How much? A percent to 1,000 to calculate on premiums. So how much to spend on life insurance for good returns? I would say anything around 10 to 12,000 with good returns will work. That is something that you can work on. Okay. But if you need anything more specific, we can actually draw a plan for you. Okay. Then you let us know how you want to do this. Because I would say insurance is a very personal thing. It actually changes time to time for people, and you need to sit down and actually talk about it, right? So I will end my session today, and thank you so much for coming in and see this. And I'll see you again on Wednesday. Wednesday, we have a live show again on insurance matters. On Saturday, this coming Saturday, we have a special guest, a vascular surgeon who is going to talk about diabetic foot. All right. So I'll see you again, guys. Thank you for watching, and thank you so much. This is Lim Ren En from Lim Ren En Life Insurance Matters.